Welcome to Cattle Market Weekly's Audio Market Report, brought to you by Zoetis, dedicated to providing innovative solutions for healthy, productive cattle.
Hello, this is Wes Ishmael. Welcome to the September 7th edition of your Beef Cattle Market Weekly with a look at last week's market action and some thoughts heading into the new week. Depending on where you were at and what you were trading, some bloom faded from the summer recovery in cash calf and feeder cattle prices last week, a rally driven by dwindling cattle numbers and lower anticipated feed costs. But prices continued to hold their own. Yearling feeder cattle trended steady to $2 a hundredweight higher, with a full advance in direct trade, according to the Agricultural Marketing Service Friday. Steer and heifer calves sold unevenly steady during the holiday-shortened week, with southeastern markets trading steady to $3 lower. According to AMS analysts, yearling feeder cattle demand is noticeably better in the northern half of the country, where silage cutters are chopping away at the least impressive immature corn fields, while farmers still believe their favorite fields will bring about handsome yields despite slightly lowered crop condition reports. AMS analysts add, calf demand seems equally good throughout the nation, with near-record price levels being reached when comparing to either heavier feeder values or the best fall forage outlook in several years. Although the CME Feeder Cattle Index was $1.04 higher week to week on Thursday at 156.36, feeder cattle futures closed an average of 63 cents lower week to week, pressured in part by a late week bounce in corn futures, which were up 13 cents week to week for new crop corn contracts. Analysts with the CME Group Ethanol Outlook report noted last week, the spreading drought in the Midwest has damaged some of the U.S. corn crop, and that means there will be less corn available to U.S. ethanol producers than earlier thought. The U.S. Drought Monitor showed that drought in the Midwest expanded, with 25% of Iowa in a moderate drought on August 27th, up from 7.9% a week earlier. There is little support from live cattle futures last week, which closed an average of $1.28 lower in the front two contracts week to week. Cash-fed cattle could muster only steady money at $123 a hundredweight in the southern plains on late week trade. Prices in Nebraska trended steady at mostly $195 a hundredweight on a carcass basis, while trade in Iowa, Minnesota dropped $1 to $2 in the beef to $193 to $195. Live trade in Iowa, Minnesota was 50 cents to $1 lower at $122 to $122.50 a hundredweight. Still, analysts with the Livestock Marketing Information Center said last week that calf and yearling prices are forecast to remain above year-ago levels for the remainder of 2013. However, they added that the pace of price increases seen in recent weeks is likely to slow and prices might decline modestly. According to those LMIC analysts, for the southern plains, in late May of last year, the weekly average price of a 500 to 600 pound steer calf started at $183.68 a hundredweight and then plunged to $153.56 by late August. Over that same period, 700 to 800 pound steers went from $155.13 down to $140.30. This year, LMIC analysts say the situation reversed. Steer calves at 500 to 600 pounds in late August averaged $177.29 a hundredweight, up $25.75 since late May. Between mid-May and late August of this year, 700 to 800 pound steers gained $26.94 a hundredweight. For the remainder of 2013, LMIC expects 500 to 600 pound steer calves, basis the southern plains, to average in the low 170s a hundredweight, and for 700 to 800 pound yearling steers to average in the low to mid 150s. Looking ahead, LMIC analysts say, if cattle feeding returns are aided by substantially lower feed costs, calf and yearling prices are forecast to post annual increases throughout 2014. They add, more year-on-year increases could happen in 2015 with the normal drought caveat and two additional requirements. First, that the U.S. economy steers clear of economic recession, and second, that foreign markets can absorb most of the expected dramatic increase in U.S. chicken and pork production. This is Wes Ishmael. Thanks for listening.
Watch for Beef Magazine's audio market report each week on the Beef Magazine website and in the Cattle Market Weekly newsletter, brought to you by Zoetis, dedicated to providing innovative solutions for healthy, productive cattle.